This episode of Empire is brought to you by QuickNode. QuickNode is an end-to-end blockchain development platform that makes building Web3 apps super easy. No matter what you want to build, you can effortlessly develop any application by leveraging their elastic APIs. Go to quicknode.com, use code Empire. You'll get a free month on their feature-backed build plan. That's right. Go to quicknode.com. You'll get a free month to start playing around. You'll hear more about QuickNode later in the show. Santi, I think this is the biggest smile I've ever seen on your face today. So happy Thursday to you. Why are you feeling so good, my friend?
What's not to like? It's Thursday. We always record on Thursday. It's always a good day.
Thursday.
I feel like
It's always a good day.
But really, I pinged you earlier. I was like, "There's not much going on."
I know you
Feels
wanted
like
to maybe not do this roundup. I was like, there's some stuff
I was
Coinbase
folks,
announced wallet-to-wallet
I love doing roundups,
messaging.
but I was this close to calling off the roundup. I mean, then all of a sudden we of course the Ripple case ruling dropped, which I think we just start with that, right, sir?
Let's start with it. Great. Big news today. Just dropped about 20 minutes before we started recording this. A U.S. federal judge has partially sided with Ripple Labs in an SEC lawsuit alleging that that Ripple issued an unregistered security offering with its XRP token. So basically, for the last, how long has this been going on, Santi? A couple of years, the SEC has basically had a lawsuit against Ripple saying that they had issued this unregistered security. Ripple has been fighting back. I know they spent tens of millions of dollars. I've heard some people say that they've spent hundreds of millions of dollars fighting this, whole bunch of time battling it out in the courts. And they got a huge, a massive win. One of the biggest, I think, legal wins actually crypto's ever got came today when they found that the programmatic sales on the secondary market were not an unregistered securities offering. So huge win for Ripple today.
Yeah. I mean, the headline, of course, is, and I'll quote directly from an excerpt in the kind of the document that was released. XRP as a digital token is not in and of itself a quote unquote contract, transaction, or scheme that embodies the Howey requirements of an investment contract. Rather, the court examines the totality of circumstances surrounding defendants' different transactions and schemes involving the sale and distribution of XRP. This is where, of course, the headline was super positive, right? It was like, hey, look, Ripple. Some headlines went as far as suggesting Ripple is not a security. Now, the correct, I would say the other headlines that I think are more balanced is Ripple is not an investment contract. Now, the more nuanced take here is, as you said, there's a couple of different types of transactions that happen. One, the really two in my mind, or if you look at the doc, and it was still kind of processing this, but the first one is directly to kind of institutions, venture funds or hedge funds or whatnot. The other one was more through distributing through exchanges, and that is where the court, I think, focused on, which meant to say on the second ones that this, when they were selling through exchanges, as you said, programmatically, that seemed to be okay because there was not a contract per se, and it was really this: is there a contract, right? If you're selling to like a counterparty and there's a contract, well, obviously, like there's a physical contract that digital whatever that
right. So you're saying institutional sales or like fundraising deals or
those
OTC,
have a contract.
Those are securities, they said, but trading. I think they said.
Distributing through. Did they say
court, yeah, it says here. I'll just read it direct from the stock. The court concludes that Ripple's institutional sales of XRP constituted the unregistered offer and sale of investment contracts in violation of Section 5 of the Securities Act. So the institutional sales, fundraising, OTC deals, things like that they did say that as a security. However, the programmatic sale on exchanges didn't meet third prong of Howey. So sales to users via exchanges was fine as long as it was through an order book and not through some like OTC desk, Launchpad, ICO, IEO, etc. So huge win, right?
First of all, yeah, I mean, this is a well-capitalized player that was able to fight it for a number of years, and so I think it is certainly a win. So who are the key winners? The first thing that popped in my mind, and I tweeted about this, is exchanges. I think exchanges, particularly an exchange like Coinbase, and look, full disclosure, I have exposure. I've been talking about this a lot in the podcast, Coinbase. And I mean, it just, you could envision a world where exchanges play the primary role as an investment bank whenever there's a token listing. They're the ones that are gonna token projects will go to an exchange. Will have to submit information. I mean, a lot of projects already do this. Like if you want to get listed on an exchange, you have to provide a lot of information around who are the investors, who's the team, background of the team. They do all kinds of information requirements. The same with an investment bank, whenever it's taking a company public, would require all this information, right, for the roadshow, as a kind of like a lead left book runner, if you will, placement agent. So a lot of this information has already been recorded by exchanges. So I think if I'm reading here, the key winners here are exchanges, also projects that have like done these type of sales through exchanges. Um, and where I'm not as clear, maybe you have an opinion on, is so where does so if some sales are contracts and others are not, then you can't really go as far as saying like Ripple is not a security, can you? Because I don't think we're there yet. At least that's my
Hmm.
interpretation.
So I think the biggest winners. So Ripple's a pretty centralized company, right? Or centralized foundation, whatever you want to call it. They've
Yep.
got like Brad Garlinghouse. They've got Chris. What's his name? Chris Larson, I think it is. If Ripple's not a security here, then most of
But
the yeah, I see. I know what you're about. I know what you're saying.
you know
They're not
those
saying
things.
that
Of
Ripple's
course,
not.
like
Yeah.
you read the XR, of course, XRP as a
Yeah.
digital token is not in and of itself a contract transaction or scheme, which is one of the requirements of the Howey test. So if you fail one of the requirements, then I guess you can conclude that it is not an investment contract. I'm just asking the question, can you go as far as saying, if you read that line, that it's not a security? That's all I'm asking.
No, I don't think you can
I
conclude
don't
that, but
think so.
I don't think you can, but I think it's one step closer. And here's how I'm thinking about it. So you said exchanges are a big winner. Completely agree.
Mhm.
Huge exchanges are a huge winner. If right, these institutional sales and OTC and direct token sales are securities, all selling of these tokens is going to flow through public order books. Another big winner. I am starting to my mental model for these tokens is infrastructure tokens and app tokens. I'm going to call Ripple. I'm going to call XRP an infrastructure token. So an infrastructure token is a token that basically derives value from selling block space. So Solana, like I think some of the winners here, Solana, uh, Cosmos, like Polygon, basically the L1s, the L2s. I would bucket all of these as like people whose token is directly linked back to the business model of selling block space, which is what the business model of an L1 is. There's another bucket that I still think is TBD, which are the app tokens. So I don't know if the SEC sees it this way, but like I feel like this is going to be it's not the conversation yet, but I think that's where this conversation heads is infrastructure tokens, business models, block space, tokens linked back to the it's a commodity and it's a pretty clear commodity. Then there's these like app tokens where I think jury's still out on that.
Yeah, look, I think I don't want to minimize the impact, and I guess it is a very positive news, but it's important to like still process this, have the right people, lawyers, which I'm not one, comment on it, and of course we'll have Rebecca, maybe Jay, come on and really parse this through. There's going to be a lot of threads coming out, the next 24 hours, and we'll retweet and maybe comment on that next week. But so far, I think I would be cautious to, of course, I'm optimistic about this. I think the world that I envision is one where I remember seeing the SEC create a website that was like information capture disclosure group for crypto specifically, but I haven't seen like much come out of it. But if I'm looking at the chessboard and how it's going to move forward, I think to your point, it looks very much like any token issuer is going to have to go through an exchange. Um, I don't know how that where the venture rounds come into this pre-token.
It gets messy, right? It gets
Yeah.
really messy because you only have two options to buy a token now. You can't do these
What
out,
what I'm
right?
saying is when you're investing in an early stage company pre-token, you know, a SAFT, which has a warrant for a token, I'm not sure if there's an impact at all to that ecosystem, because there's still a place, right, where a company, when it's an idea, a seed round or a Series A, like you can't just launch a token. Like, what is this, right?
Right.
I don't think I don't think you just go direct ever to have a token. I think at some point, if you're going to launch a token, you have to sell it, distribute it, do the proper
Huh.
information disclosures to the public. Meaning, this is customers of an exchange, like registered customers of an exchange that have been KYC'd, AML'd. Someone might say, wait a minute, what happens though to, for instance, Coinbase is not in every country, right? So does that mean that any exchange? Is there going to be a list of exchanges where this becomes relevant? Is this finally like US persons will be able to participate and invest in these tokens if they're customers, registered customers of a US registered license exchange? I think so, right? So it's a big precedent, I think, and offers a way forward for a lot of projects. I think I might change my mind on this, but so far, a pretty nice path forward for if you're ever thinking of launching a token and you want to be compliant, then you go through an exchange in a programmatic sale in a fair, equitable
Or you
manner
do
in the
like a Reg D
distributed.
filing. Do you remember Stacks? Like Munib and Stacks, they
Yeah.
sold. I think you only have two ways. Like if you're a big venture fund, you only have two ways to buy a token now. You either buy it on the open market, or you have to basically convince the protocol to do a Reg D filing, which is very expensive, right? I remember I think Blockstack, or now it's called Stacks, did this Reg D filing, and they did it in the right way, but it cost them a boatload of money. It's really interesting.
Yeah.
But you bring up a really good point. This might have a weird effect on the market. You might see a lot of companies and protocols like racing to actually launch a token. It felt like we were in like anti-token days. It was like just raise normal money, do like a promise to have a token later, and like you weren't. I think this is actually going to push a lot of protocols to launch their tokens faster, because if you just did like a big OTC deal or a venture raise or staffed or something like that, that's what the judge here constituted as going as a security. So now what you want to do is you want to basically sprint to get your token out the door. I think that could be a weird second order implication here.
Possibly, yeah. I think then the second thing on my mind is a lot of these exchanges, some have like broker dealer licenses, other like I'm still kind of thinking through like, does that mean that like exchanges now will have to get a broker dealer license or partner with someone that has a broker dealer license? Um, anyways,
Yeah.
I don't know,
Yeah. Interesting.
but
I mean, this the other winner is the ETFs, right? Like, how do you have a case
mhm.
to not get this BlackRock
Yeah,
ETF approved at this point if you're Gensler,
zooming out, if we were talking about like at the beginning of the year, we always make these predictions, and time again, we talk about, okay, well, it'd be nice to get clarity. And it's, I mean, as you mentioned earlier, this Ripple case started 2.5, 3 years ago,
Yeah.
maybe even more. And so folks should just realize like these things take a lot of time. And so, of course, the other cases might not take as long because I think they've been moving at a pretty fast pace. And maybe this is in one of those cases that really sets a nice precedent for other cases to perhaps move at a faster pace. But of course, we have the grayscale lawsuit, right? Alleging that, around the you know the GBTC and ETHE kind of products. That seems to be moving in a positive direction. You have the Coinbase SEC kind of case happening as well. So those two, I think, are really big. And in my estimation, the court has been siding favorably both with crypto companies and not the SEC.
Yeah.
So yeah, it'll be interesting to see the SEC response. I'm sure there will be one, but yeah, no, overall quite positive for the industry. I mean,
What
not
was
surprised.
interesting? Did you see the Mashinsky Celsius news
Yeah.
today?
Well, I wanted to get to that after. Yeah.
Uh,
But I was just going to wrap maybe this conversation up by saying Coinbase is now up another 10% on the day. Of course, it rallied a bunch. It was up. I mean, my goodness, like
started the year around
a
like
month
35.
ago.
Yeah.
Yeah, I started a year at 35. Now it's up 3x. It was a month ago, it was sitting at 50. Now it's almost doubled. It's 94, 95.
We're up 100% on the month, 80%.
Yeah,
We're
yeah,
ripping.
yeah. Give or take. Um, it's 82% on the month. On the year, it's 158%. And I think the biggest catalyst here, of course, is before this. I think the market's interpreting this as quite positive for Coinbase is the as we talked about last week, the ETF and having all these. If the ETF gets approved, Coinbase has all these agreements with the ETF providers for like what is called monitoring, um, suspicious monitoring,
Yeah,
all this
yeah,
stuff.
yeah.
So, anyways, yeah,
You can
quite
quickly
positive.
see how this changes, right? Because
Yeah.
bear markets end when things that feel unthinkable actually happen, right? And I think the Ripple win is one of those moments. BlackRock ETF approval would be another one of those moments. This also maybe Coinbase ripping opens the door for more crypto companies to go public. Do you remember the Krakens and
Mhm.
Circles of the world who had talked about going public at the kind of fall of 2021? Never happened because the market fell out. But
Yeah, you're absolutely right. I mean, I think it's important to look. Certain things move really slowly, right? This Ripple case has been going on for 4 years, and then very quickly momentum shifts. Now
yeah,
we could before this earlier this week, a lot of people were like sour on the. It's like every week it's quite volatile how sentiment shifts in crypto, right? When very quickly when the Fed stepped in and said, "Oh, there might be two more rate hikes." This before the CPA, the CPI number came in. People like crypto immediately like went down. People like, oh, like it's just interesting because there's so much noise in markets, particularly in cryptos, because it never shuts down, right? But I do think if you were to zoom out, I think these two events, the ETF and these cases, are very strong signals that can shift momentum very quickly. Putting macro aside and all the things that we can't control, but as an industry specific catalyst, these two are massive, I think.
yeah, yeah. Tough day for Mashinsky. SEC, DOJ, CFTC, and FTC all sued or charged Celsius Mashinsky in all this morning. All like
Wasn't he arrested as well?
yeah, he's put into custody as well.
Yeah. I think
Um,
the biggest allegation, or one of the biggest allegations around wire fraud, which is a very broad uh, kind of um, term, is that he manipulated the price of Celsius, the token, along with
that's
like,
interesting.
yeah, along with selling it and not making proper disclosures. But yeah, funny. I met Mashinsky. He was pitching Celsius in the early days in New York. Yeah, my spidey senses just went off. I
Dude,
was
so do you know the backstory of Blockworks is Mike and I paid like $100 to go to an event in 2017,
yeah.
and one of the speakers, actually, I think the keynote speaker at this event in New York was Mashinsky, and Mike and I were like, oh my god, all these people paid money to go hear like this scammer speak on, because I mean you meet the guy and your spidey senses, if you have any gut feel towards people,
Yeah.
your spidey senses
I
go
mean,
off.
I vividly remember him claiming that
Inventor
he had
of
invented
VoIP,
VoIP.
right? Yeah, yeah, yeah,
And I was like, and I had done like Vonage and a few deals with
yeah,
JP Morgan. I'm like, yeah, I'm pretty sure you're not. And
yeah.
like a quick
Yeah,
Google search,
quick
and you're like,
Google.
most definitely not.
Yeah. No,
It
all right.
is wild though that I mean he ended up raising from like pension like
Oh yeah, the Canadian.
CCPIP the
Yeah.
Canadian pension. I mean,
Mhm.
folks, just yeah, the manner in which he was. I think there are certain traits of people that in crypto. I think your radar for this stuff needs to go up if you want to survive and just dodge bullets and landmines. But when people make these kind of claims and are very defensive, it's just like you know, you have to pause and like just like probably not do business with these people. But
Yeah,
yeah,
obviously. Yeah. Did you see the exchange between the CRO and Mashinsky? Here,
no,
let me read this to you. CRO says to Mashinsky, the issue is that people are selling and no one is buying except for us. The value was fake and was based on us spending millions just to keep it where it is. Mashinsky responds, is Dogecoin value real? How about the 5 billion for Solana? Everyone knows what these tokens are and wants to buy them because they think the price just keeps going up.
huh?
Not great, Mashinsky.
Remind me here, but one of the biggest claims here is that he had used depositor money to pump the price of Celsius token while he was selling at the same time his personal stack.
Yeah, there's a bunch of claims here, right? The SEC claims that Celsius and Mashinsky, first off, raised billions through these like fraudulent and unregistered sales of what they call crypto asset securities. Number two, they repeatedly lied to investors about their financials, so they're cooking the books basically. And then three, they were manipulating the price of Celsius or Cell token, like you said, which was the company's kind of native token. So. The good news in the SEC case against Celsius is they only said that Cell was a security. They weren't. It's not like what they've done in the past couple months where they said Cell is the security alongside all these other ones.
Alongside all the other tokens that they, some of the tokens that supported. Yeah, absolutely.
Yeah. So, anything else?
Well, there's another earlier this week. I think it was the New York and
SDNY. Southern District.
Yeah, I think his name is Daniel. This was the first time that attacking a smart contract was deemed like a fraudulent activity, right? And basically, it was a Solana DeFi protocol, I believe. You might know the specifics here, but this particular individual, I think, manipulated the price of a DeFi protocol and like reaped a pretty good stack. I forget the exact figure. But anyways, I think this is important in the sense that there's been a number of attacks of this nature in DeFi protocols through either flash loans manipulating kind of the Oracle price feed, and you wonder, hey, well, this is what has been deemed like like an inefficiency in an ARB is now potentially could be considered fraudulent activity. So. I mean,
what was he doing? It sounds like he was creating fake. So this guy, I forget his name, but anyways, this guy was creating fake accounts with fake price data to what they say is fraudulently inducing the protocol to believe that they're real accounts, and then he used these fake accounts to generate millions in inflated fees based on this kind of fake price tick data that he was supplying. And then, like you were just talking about, like leverage these flash loans to take out tens of millions in flash loans, basically provided funds as liquidity in a pool, used the fake accounts he created to claim an even higher percentage of the LP fees, repaid the loans, and you can basically just put that on repeat.
Yeah. It's
that's funny. Is that an arbitrage opportunity or is that fraud?
That's what that's my
I guess
point.
It's fraud because he created fake accounts to do it. And created this like kind of fake data.
Yeah, but I mean, the obvious question here is then, well, where do you what does that mean, for instance, for airdrops? A lot of people like in crypto, you can have multiple accounts, right? You can have multiple wallets.
Yeah,
and this idea of Sybil you can Sybil attack a protocol. Then does that also open up? Where do you kind of draw the line between an ARB, an inefficiency between two protocols, which I think in that case it's not, versus like exploiting a smart contract to reap a certain benefit. Like, is this like a very gray area here? I think in this one we're not probably articulating it very clearly, but yeah, I wouldn't go as far as saying like all ARB strategies in crypto are.
Did you see the DOJ got his Google receipts and they found what he was searching on Google afterwards?
Yeah,
it was like DeFi hack. Pulls up the DEX's website, then Google's crypto white collar criminal attorneys, then Google's just the word embezzles, wire fraud, how to prove malicious intent, how to stop government from seizing assets, and then the last one is
cross borders with crypto.
The last one is buying citizenship.
Yeah. Interesting. Those were, I think, the biggest regulatory.
Yeah. There were two other really interesting things that happened this week. I actually, before this Ripple thing started, when you were like, should we do the roundup? There was actually two really cool product innovations I saw this week. One was the Patek Philippe NFT loan, and the other was Coinbase Wallet-to-wallet messaging. So maybe we could talk about both those. I don't know if you saw either of those.
Yeah, but
let's do Patek Philippe because I know you like your watches. This week, basically what happened, if anyone didn't see it, is this week a lender gave a total stranger on the internet a $35,000 loan at 12% APR. The kicker is that this was done in DeFi NFT land. Basically, a Patek Philippe which is a watch, a nice watch brand, was used as collateral here. The borrower sent the watch to an escrow company, who then sent back an NFT, which the NFT represents ownership of the watch in this case. The borrower then listed the NFT on Arcade, I think it's arcade.xyz, accepted the best loan offer on it, and then the NFT was transferred to an escrow wallet until the term is up or until the borrower repays. And it's really interesting because the only way to get the watch back is by burning the NFT. So that if how's this work? Yeah, if the borrower defaults, the lender can then claim the watch. And it's really cool. I mean, you can see this. This is obviously very early days, but like you can see a world like the lender doesn't even have to know the borrower's name. They just have to know that they were the rightful owner of the watch, which is what the NFT does here. And obviously,
you need to trust the escrow agent.
Yeah, I mean, I think there's this company 4K Protocol that's doing this, and for the naysayers, obviously you can go get a loan on your watch at like a local pawn shop or something like that. But anytime that you kind of tap into global liquidity versus local liquidity, you're always going to find the best rates. So like 12% APR is pretty high right now, but eventually, as this becomes a global liquidity market, the rates will be driven down.
Can you be? I guess the way of defaulting is not paying interest.
Yeah, I guess so.
Yeah, not like because there's a secondary market on these watches. There's fair amount of liquidity. If the value of said collateral, who's appraising the collateral, like or is it just like just interest? As long as you're paying your interest, irrespective of the secondary market price of this particular Patek Philippe watch, then that doesn't really compute.
Yeah, I have some questions like, how do you verify the authenticity of the watch? Well,
you can ask these houses.
You can go to the 4K Protocol to do it, or is 4K Protocol probably using someone else on the back end? Maybe.
Yeah. You can send the watch to service to Patek Philippe registered, or one of the houses themselves, or to get it verified.
Yeah, I think it's pretty cool.
Appraise it.
4K.
Yeah, there's some costs, of course. Like you appraise it, you verify authenticity, and then you
probably bake that into the APY though, which then gets sent back on the back end a little bit. I'm sure 4K is clipping
probably like an origination fee that is being deducted at some point. Yeah,
but this is cool. In a nutshell, basically 4K Protocol is this physical item to NFT on-chain converter, and then you can use that physical item in DeFi. I don't know, it's pretty sweet. You can start to see like pieces connecting, right? Like, we did that episode, you weren't on it, but with Leschner talking about what he's doing with Superstate and like real world assets. That awesome episode we did with Punk 6529 talking about NFTs. Like, just you can kind of feel this all coming together and like a little tip of the iceberg for what's coming.
Yeah, I think so. It is quite interesting. Earlier this week I've been thinking a lot about real world assets, and this is an area where I've had like mixed feelings about. For one, I earlier, people may have heard me say I'm more interested in digitally native use cases first. When you think about versus some real world assets, it was just I was critical because hey, you may have an Oracle problem. You obviously have a trusting a custodial problem or a underwriter or verifier problem, right? But I think like looking into it, I mean, and a lot of this was inspired 2 days ago. Maker, was looking into MakerDAO's real world asset portfolio, and it's valued at like 2.3 billion DAI. So it's not chump change. And importantly, like real world assets, and it's a combination of like different providers, and a lot of it's in treasuries, some like hedge funds like Block Towers in there. They have a lot of it is with what is called you might know this better, but like I think they did a huge T-bill buy right through this like agent, Monetalis Clydesdale or so, 1.1 billion of balance. Then they have a bunch with Coinbase custody, different strategies, but like 78% of all of all stability fees generated this year have been from real world assets, which is pretty wild, right?
Say that stat again. 70% of fees have been generated.
If I'm reading this correctly, real world assets make up 79.7, call it 80% of all stability fees generated by the Maker protocol.
Where do you see that?
This was
Oh, that's interesting.
Tweet from Maker. Yeah.
Wow.
In May, 80% of all stability fees generated by the protocol world were from real world assets. So
Huh.
the real world asset stability fees for MakerDAO have accumulated to 17.2 million DAI year to date. And since inception, that's been 19.5.
Hmm.
So that's a lot of fees, right? A lot of it's just treasuries, right? But yeah, it's
That's cool.
been pretty interesting to see. So all of this, like we talk a lot about catalysts, right? And DeFi has been percolating, of course. Like people talk about the resurgence of DeFi. That's been a narrative that's kind of catching on now.
Yeah.
And DeFi has been sort of left for dead for 2 years or more. But yeah, so my thinking there, like even Larry Fink from BlackRock alluded to this kind of in his Fox interview, talking about like, of course, the ETF, of course, Bitcoin, but then he said the tokenization of assets is just a huge market, right? And it reminds me, of course, when we talk about this Patek kind of use case, it may seem like small, quirky, and you might not even like watches or whatever, but it's a huge market. Like
Yeah.
secondary market on watches is not small. This company, Chrono24, which is
Chrono.
uh,
Yeah. Exactly.
kind of like a portal where you can see and like look at like all the different like
Yeah.
watches that are for sale in the secondary market. And now Cristiano Ronaldo just invested. It's valued at like 1 billion. Like Insight Partners is an investor.
Dude,
eVenture Arm.
Hodinkee was a media
Yeah,
media company. Chernin Group bought them or did a big
yeah,
investment in them. They're just a
yeah.
media brand. They do like 100 million in revenue from their secondary watch marketplace now.
Secondary markets are highly inefficient. Certain secondary markets, right? Companies like StockX and whatnot, the verification and all this stuff. But I do agree that, like, I was just thinking, real world assets, I think as a percentage of DeFi's sort of AUM TVL is going to rise considerably. I'd say.
Yeah. Here,
It's probably going to go to battle tested DeFi protocols, right? And in L2s where you kind of know the counterparty. So look, not all real world assets are, the same. Some I think are more well suited. Maybe Leschner's company allowing you to like directly like tokenize treasuries is seems pretty useful. But in aggregate, I think there's a big
yeah.
opportunity here.
Here's my counter argument against to Leschner's. I've been thinking about that podcast a lot. To Leschner's company is that new technology platforms typically gain traction not by bringing on an existing supply from somewhere, but by enabling this like really long tail of supply that wasn't accessible with the prior platforms. So treasuries, you can go buy treasuries today on like any platform. It's very easy to get treasuries today. Um, the real world assets, on-chain real world assets that are going to gain traction and like drive adoption here are going to be things that you can't access today for like watch liquidity or something, like taking a loan on your watch. And if you think about examples of this, you've got like I don't know, what are some examples? Airbnb. Like Airbnb basically unlocked all these like mom and pop people to basically list their
Mhm.
homes. Now that Airbnb is huge, you have the traditional supply of like hotels coming onto Airbnb, Uber and
Mhm.
Lyft. Now taxis use Uber and Lyft
Yeah.
to find demand. But like in the early days, obviously it wasn't like that. YouTube, right? YouTube made it possible for anyone with a camera to publish video content. Now the big brands have come on. So it starts with this long tail of supply, and then eventually that pulls in the kind of like existing supply. But it usually doesn't start with the existing supply because you can access that already. Spotify, right? Primarily
Yeah.
like just these small indie folks. Then it gets big, and then the traditional music record labels come onto Spotify. So
Yeah. I think obviously, let's keep it simple, folks. Like time and time again, like we try to overcomplicate and we become defensive. Just like finance, the key thesis, at least Parify, we were kind of the first like DeFi focused fund before DeFi was even a thing. Like both Ben and I came from finance backgrounds, and I think if you come from finance, you have a deep appreciation for how inefficient it is. Like you don't even have to come from finance. If you compare the types of products and services you have access to in financial products through your bank account, um, feels really, really um, antiquated, inefficient, and some folks might not appreciate it, right? Because you're like, oh, Venmo works fairly well, but then it really it takes a company like even like Square, for instance, or Affirm to come in and like innovate, and people are like, oh wow, I wasn't like or Robinhood, and they're like, But really deep down, I mean, finance is still highly inefficient, probably the most inefficient
Right.
industries. It hasn't really caught up to the internet. And that's really kind of the use case here of crypto. It's like finance is due for an update, and this technology uniquely kind of enables tapping into and creating like these more efficient capital markets where you can tap into global liquidity
Yeah.
through something like a stable coin or something like a settlement, like using like the Ethereum protocol, whatnot, and so it's sometimes just go back to like the simple principles of like why we're kind of building this. And the nice thing is, mind you, DeFi is pretty battle tested. It's been working in very adversarial conditions. Like, time and time again, we talk about ARBs and exploits. There's been like crypto is a very volatile market. And so when you create money markets like Compound and Aave and Maker, like allowing people to lend and borrow and to be able to support and create like this network to absorb these like huge constant shocks is super impressive. And that gives you confidence to then say, okay, let's plug in way more liquidity, whether it's real world assets or more stable coins. Like these protocols you can inject, and I think I'd be open to discuss this if someone doesn't believe it, but you can inject way more liquidity in those protocols. And I think you have a fair amount of confidence that you're able to absorb it in like, um, and that I think is a great setup for the next phase, right? If you really
Yeah.
want to see DeFi scale to trillions, it most likely will be using, when people when we talk about a permission DeFi environment, like an L2, for instance, where you have to KYC, right, or it's base, right? We have an episode with the Coinbase folks where everyone kind of, if you're the most simple kind of way that I see DeFi scaling over a trillion is base or some L2. For instance, base, all the customers of Coinbase have already been KYC'd, right? You then have access to base, this L2. And in that ecosystem, you have these apps, whether it's Compound or Aave, like a bunch of DeFi apps. And you can even potentially even buy tokens, right? New token listings, right? Because it's distributed in a programmatic manner. And also have access to all these different tokenized real world assets, right? And then you have millions of customers interacting DeFi.
All right, quick break from the show. There is this kind of overused cliche saying in crypto, but it's true. Bear markets are building, and everyone tells you that and everyone knows it. What people don't know is that if you're building apps in crypto and building apps in Web3 without using QuickNode, you are building on hard mode. So QuickNode is this amazing blockchain development platform. It reduces costs, streamlines the time to market for your app, and it offers consistent performance at scale. For folks that have built apps, you will know that there are a couple key points here. One, QuickNode offers unlimited endpoints across 18 different chains and 35 different networks. They have response times that are 2.5 times faster than any of their competitors, 99.99% uptime, and a dedicated 24/7 customer support team. If you've been listening to Empire for a while, you might know that I am no Gigabrain developer, but I do know a lot of devs and a lot of great product teams at other places. So when I see Coinbase and Twitter and Adobe and OpenSea and Dune Analytics all leveraging and trusting QuickNode to power their business, that's when we get excited, and that's when we want to partner with them. They're the best solution for any leading crypto and Web3 company that is seeking an end-to-end blockchain development platform right out of the box. So my message to you, get off hard mode, let QuickNode handle the blockchain infrastructure, let QuickNode handle the security, let QuickNode handle the performance while you focus on building beautiful products for your users. Visit quicknode.com, super easy. You can use code EMPIRE. You'll get a free month on their build plan. So don't forget to use code EMPIRE. Santi and I got to get credit for this one so they know that we sent you, and you will get a first month free. Hope you guys enjoy it. Hey everyone, we'll get back to Empire in just a minute, but before we do that, I want to let you know that we have Permissionless coming up. Permissionless is a big conference that Blockworks and Bankless put on together. It is the biggest, the best DeFi conference in crypto. This year, it is in Austin, Texas, September 11th through 13th. If you've been in crypto for a while, you know that bear market conferences are the best kind of conferences. We have a phenomenal lineup of speakers. A lot of the guests that you hear on Empire are both going to be speaking there. You will have the opportunity to meet them there. And a lot of the topics that we cover on Empire, ZK Tech, roll-ups, account abstraction, MEV, app chain thesis, a lot of that kind of stuff. That will all be discussed at Permissionless this year. So because you are a listener of Empire, you get a special discount. That's right. Santi and I negotiated with our marketing team. You get 30% off if you go to blockworks.com/permissionless. Empire 30 is going to get you 30% off your ticket. Today, when I'm recording this, that's about $300 off your ticket. So type in Empire 30 when buying your permissionless ticket. You get about $300 off. Click the link at the bottom of this episode. It's in the show notes. Do it quickly because prices go up all the time. And if you are going to permissionless, hit me up, let me know, shoot me a DM on Twitter. I would love to meet up with you there. Let's talk about Coinbase. Coinbase, we've talked about them before.
Again.
Obviously, let's talk about them again. They had a cool second product. They had a cool product innovation this week with wallet-to-wallet messaging. So if you guys missed it, this week they launched built-in messaging on the Coinbase Wallet. Coinbase Wallet's been around for years. It's been around for like 3, 4, 5 years, I think. But they launched this week. They launched end-to-end encrypted, private, portable messaging on the Coinbase Wallet. It's really, really cool. I think it's a big innovation. It was powered by this startup that's been around for a couple of years.
XMTP?
XMTP.
Full disclosure, I'm an investor.
Oh,
so.
Big surprise. Yeah. Is that Galligan? Is that Matt?
Yeah, it is.
What was he building before? Was he leading product at Kraken? I remember him from like many years ago. I remember when they went and did this years ago, and I was like, oh, messaging protocol, don't really get that. And now it's cool to see it come to life.
Yeah.
So
yeah. It's really cool.
But basically what it lets you do is it allows you to connect directly through your wallet, engage with anyone, whether it be kind of business to like company to community or just person to person. It allows you to send payments across thousands of different coins. You can send, like I could send you USDC just if I had your like ENS domain, gas free USDC as well. Gives you full control and ownership over your chats, which is a concept that we've never really thought about before. It's kind of like imagine being able to take your Telegram, Slack, and I don't know, Signal conversations and Twitter DMs and kind of move them across apps essentially. Maybe one example of this is just like SMTP, which is the email protocol. I can open up Outlook, or I can open up Gmail, or I can open up any app for with my email, and it's got my emails in there. So it's I don't know, I think it's really cool.
Yeah.
All-in-one messaging, payments, no more juggling a bunch of different separate apps for payments and messaging. And actually my takeaway for this was not, I care less about the person to person here because, I messaged you on Telegram, like at Blockworks, we use Slack, we already have email. I feel like there's already so many messaging apps. I wasn't that excited about this, but it solves a big problem that we've had at Blockworks, which is interacting with permies, actually. So if you own a permie, it's very tough for us to get in contact with you. Let's say you buy a permie. There's no way to email you. There's no way to message you. So we just have to hope that you see our tweets that tell you to go jump into our Discord or jump into the Telegram, right? And that's just a hope. Now we can actually message you one-to-one through this app to be like, hey, by the way, if you own a permie, you get free access to Permissionless this year. Now we can actually send that. We've never had a way to directly communicate that before. So we're really excited about it.
Yeah.
Wallet wars are here, like we've talked about before. We got to have Chow back on the podcast, talk more about the wallet wars, but it's just cool to see Coinbase pushing the limits of what wallets can do here. I think it's very exciting. So
yeah, the functionality of wallets is I think very bare bones here. And like even of course, like Etherscan supports like messaging certain wallets, and you could send sending a message to a wallet, anyone can do that. Of course, an encrypted manner is a different story, right? Because you could send people may recall this, whenever a hack goes down, like a lot of times protocols communicate with a hacker by sending them, like appending certain data in the transaction that is, when you read the bytecode, it's sort of like translated to text, but anyone can see it. So you could see this exploding, and it's very, very nascent, but the use case is there, right?
Yeah.
Which, by the way, like further reinforces, right? Like Venmo really made like finance fun, but like in the sense of like,
with the news feed,
it's a messaging, right? And
Yeah.
you were like, it became really popular. So is Robinhood, because
do you know why they did that, by the way,
activity.
for Venmo? Was when you type an emoji to your friend, like it's like you type a house emoji, then they can it's much easier for them to categorize the data on the back end. So.
Yeah. The reality is most people don't like to think about their finances or switch providers, but anytime you embedded in the flow of messaging, like a communications, it explodes. Like the
Yeah.
number of transactions, the number of users, like the Asian giants really did this particularly well, like WeChat and Kakao and all these different messaging applications or social applications really embedded finance after the fact. And so this is where, of course, we joke around like DeFi has like 10 active users. I think you can see through messaging and communication channels opening up, this could really, like, stablecoins are a killer product. They're probably the best product crypto offers today, right? And so, when you talk about embedding now communications to that, it's huge. Like,
Yeah. We got to get Coinbase as a sponsor here because I got one more Coinbase thing. Base is now open.
man,
Base just opened up. Base like quietly opened up mainnet today for all their users. So, well, I'm good for Coinbase. Bullish Coinbase.
yeah,
So,
it's good to see that. I think they carry a lot of weight,
yeah,
and they do good for the ecosystem.
that's all I got, man. Arkham botched a bunch of stuff this week. We don't need to pay.
Yeah, guys, watch out for the referral link. They're doxing people, and they have your wallet address. So don't do that.
Google opened up crypto access. That's kind of cool.
Really cool. But could you just talk like 1 minute in that, because I think just in my mind is probably the biggest news.
Yeah,
Other than
Basically, Google Play now allows users to earn crypto assets in apps and games. So the TLDR is it's been very hard to like kind of embed crypto into these apps. There's a lot of restrictions against it. Google announced that they will now permit apps and games
this
that
is on
allow
Android, right?
that allow users to buy, sell, and earn crypto like NFTs. And
Mm-hmm. Didn't it's always been an issue with the phone, right? Like the App Store, for instance, has been really hard on crypto.
yeah,
Any sort of payments or crypto application, even like buying a book through
well, Apple's
Amazon
been
app is,
very slow and conservative when it comes to allowing users to trade
well,
crypto.
it's monopolistic behavior
Yeah.
too. I don't think they're like
But I
slow
just
per se.
I
I think they're
interrupted you.
just
You
like,
were yeah. Good.
but Axie, I think, got like
Yeah.
approval this week, and there was a report that even in spite of that, like the user base was like not really growing that much. But I think my point more so is, I think it puts pressure on Apple, like having
Oh,
Android
for
now
sure.
really move in this direction. Then, I think it sets a stage then for really making the argument where if all of a sudden Apple feels pressure that in lost revenue, then I think obviously they're the behemoth, right?
Yeah.
Dominant smartphone player, but still, I think it's important as we talk about these gatekeepers that have been historically very reluctant in allowing any sort of crypto apps or
Yeah.
services in their
Let me
system.
read you this quote from this guy
Mhm.
Joseph Mills, who's a product manager at Google Play. He said, "From reimagining traditional games with user-owned content to boosting user loyalty through unique NFT rewards, we're excited to see creative in-app experiences flourish and help developers expand their businesses." Good
Yeah,
for Google. Good for Joseph.
yeah, absolutely.
True rap, man. That's all I got for you.
I think so. Short one, 45 minutes. Oh, you know what I watched yesterday?
What?
Mission Impossible. The
Hell yeah.
eight.
Hell yeah.
Man, I went to this movie at 9:45 p.m. Of course, trailers. What's going on with the world? Trailers last 25 minutes. And I'm sitting there. I'm like, the movie started at 10 p.m. It's a 2 hour, almost 3 hour movie. I mean, I love these kind of movies. Like I'm a fan
Yeah.
of this stuff. James Bond, like Mission Impossible is fun. It's a good movie. But yeah, I can't. The last time I was in the cinema, I
Did you
think
go
was to
alone,
go
Santi?
watch a James Bond movie. No, I definitely did not go alone. Man. I'm not
Oh,
what are you
you went
talking about?
alone. You went alone.
I did not go alone. I did not go alone.
I
But
respect
even if
that.
I were to go
I respect
alone,
it. That's okay.
okay, listen. You were the one that was talking. May I remind listeners and viewers that Yano, last episode, as we talk about books a lot, said, "Hey, maybe we should put a Amazon referral links here so we can start making some money on books." I'm like, listen, let's not go
Bear
there. I
market's
think we
over. We
are.
don't have to do that anymore. We're good. We're ripping. You
Thank
know
you.
what content I've been
Even if we were in a really bad bear market, I wouldn't like no.
dude, you wouldn't even let me say subscribe to the podcast. I was like, dude, we gotta get some subs out here.
I'm just
So
not into selling. The best form of selling is not selling. But hey, nonetheless, if anyone at Amazon is listening and wants to give us credits because we buy a bunch of books, then that'd be great.
yeah. There you go. You know what content I've been consuming? I fell down a Mr. Beast rabbit hole. Do you know who Mr. Beast is?
He's like a wildly influential YouTube star, right?
That's right. He's
Yeah.
like the biggest YouTube
He's the
star.
biggest, right?
Yeah,
Yeah.
he has 160 million
Crazy.
subscribers, 27 billion views on the channel. I think
Wild.
he did like 100 million in revenue last year. Guy's 25 years old. I listened to
Crazy.
this. There's a good episode on. I've never listened to this podcast before, but someone sent it to me. It's really good. Colin and Samir, I think it was called the Colin and
Mhm.
Samir show or something like that. And they had Mr. Beast on, and they just talked about his whole life. The guy's an animal. He's like an incredibly focused, ambitious human. He's 25, did 100 million. He's got a couple hundred employees. Uh,
Wow.
yeah, it's very impressive.
What
You
is
should go
his
watch his
content?
videos. What is the
Have you?
content? It's
It's all
like
kinds of
it's
gaming and
like
a bunch.
it's like comparing a $1 yacht to a $100 yacht to a $1 million yacht to a $100 million yacht. Like I was watching this yacht video, and then like Tom Brady shows up on this $500 million yacht and $1 billion, and then it's he bought like a train and like drove it in. It's like child's content. It's like 16-year-old boy humor, and it
Let me
was
ask you a question. Do you think anyone in Hollywood ever imagined this level of distribution and engagement from this uh,
this was
platforms?
no 100% no,
Right?
but it's
Like
what we're
even as far as like 10 years ago, like I wouldn't think people would have thought
no
even the Sequoia memo, like a lot of the partners wanted to pass on YouTube, and then it was like Raul Podesta
yeah.
or whatever his name is to like,
I
no,
have
you
a
got to do this
prediction.
investment.
Listening to Mr. Beast, I have a prediction. That guy is going to go launch a TV show on Netflix. It
And
will
he
be
already
the
has one on YouTube.
no, but he's gonna go get into the traditional streaming game. He's gonna go
Production.
watch a show. I mean, I don't know. I bet you he does. I bet you it'll be the most watched season of TV ever in history when that happens. Just
I was talking
calling
about
it.
to a friend about this. Like, it's crazy to think about that. Both I believe Justin Bieber and Taylor Swift got discovered on YouTube. Like, perhaps the two most popular artists of our generation. Like,
Yeah,
I'm not saying if you like their music or not, but they're probably one of the most popular or successful. It's got discovered through this distribution. And like this,
yeah.
just what is a discovery engine? YouTube. It's crazy.
Fun fact: the guy who discovered Bieber was in my fraternity at Emory. This guy Scooter Braun. He's now a huge deal.
Well,
Doesn't
I
talk to any of us
bet
anymore.
he wasn't talking
He
to you. He
does
wasn't
not
talking
talk
to
to
you
any.
before
It's
that.
funny
Ain't talking to you after.
when we were at Emory, he would we were in Atlanta. He was still in Atlanta, and he would basically like he would get like a nightclub basically in Atlanta and be like,
Mm.
"Yo, I got Ludacris to come. Like, you guys should buy
He
tickets
was
to this
that guy.
thing." Yeah,
He was that guy. Yeah, like the
he was that guy.
promoter.
Yeah, he's
Yeah.
promote. Yeah, he's like, you should buy a table. We're like, oh fuck, okay.
You definitely tried. You definitely did. Yeah, yeah. I could see you. I could see you
You
doing
would
that.
too, Santi. You would too.
No comment. Anyone, folks? ECC happening next week. A lot of stuff coming
Are
out
you
of that,
going?
I think.
No, you're not going.
No, only one conference a year, man.
Permissionless.
I'm holding myself to that. But yeah, really exciting. If folks are going to be there, let us know. Drop a comment. Let us know how it goes and interesting stuff. And otherwise, yeah, have a great
That's
weekend,
the pod.
everyone. Yano, this is the pod. It was good, right? Good roundup.
Cheers. See you guys.